That was a very highly skewed buy day. Nasdaq 100 rose by over 7% in a 24 hours. It's kind of one of those hooray moments for the markets that eventually has been brought by that good news of the CPI rating. But does the CPI rating, is this crucial for bulls' existence, light at the end of the tunnel that is making a way through this inflation cycle, or is it just a spark of fire in the black hole crisis space we found ourselves at? Liquidity crisis is just getting bigger, and crypto is just suffering from this event that recently has annihilated around $100 billion from the market. But what the situation around crypto, where the base of buyers is eroding, may bring in the economy by and large soon. Welcome to the next episode of Blockrevision. Today we are recording offline, so our chats will be out, but we are getting back on Monday with a traditional edition of a live transmission. So without any further ado, let's get into another episode. So let's get started from economy view. Right here I have for you at first a bunch of elements regarding what's right now going on with target rate probabilities for 14th of December 2022 Fed meeting. Sorry for that GRO, I couldn't translate that side for the English one, and the GRO is in Polish, the December, the abbreviation of December. Right now we can find that the Fed is about to hike interest rate by not more than 0.5 points. That what the public is betting on. So the first downside surprise in inflation in several months will inevitably be received by an equity market ovation, and recently we've seen already that bounce that is about to last throughout at least 1.5 months. It's Santa Claus rally, not Santa Claus, that is about to boost that type of event. Right after we also have not missing also post midterm election rally that's bringing more, I would say, calm to the markets. And at the last point there are some hopes for Fed making pivot very at that meeting. So there are three key components that may add up to that Fed may eventually put his foot off the metal. So what does it take to pivot? So the question is not answered yet, as we have a strict guidance in order to qualify the peculiar situation, to qualify it for that possible to make that turn of Fed. So Fed recently have been that reckless fiscal driver, where we had at first a lagged behavior when the inflation was getting out of control, where they were claiming that it's just a transitionary. Right after they hiking to that point, that more and more elements starting to crack that would happen to crypto market, that was happening to guilds of UK's bond market, and many cracks, many liquidity problems are getting out of control. But the question is whether they be able to make the pivot right now. So the Fed will want to see several consecutive months of thinner inflation that already is happening. And another thing is that for them, services inflation remains a problem. The Fed needs to see signs of a cooling labor market, and that's the one thing that also making the markets to ponder about whether it's the right time, whether they be taking this timed approach, and eventually rescue to the some extent the equity and commodities by this loosening tendency by their viewpoint. Right now we cannot find an obvious answer, but definitely the market will play for that scenario. That's why the rebound is supposed to last throughout next few weeks, unless something will happen to the macro data that may spoil the party. But right now we don't have any of that event in sight. What's next? China already easing, giving some looser strict this strict COVID-0 measures to loosen. Also, we may have found that China is the one of the country that finding this tighter liquidity as not appropriate. So CBOE right now is going to loosen its fiscal policy even more after this key economic indicators, including consumer and producer prices, showing weaker economic momentum. So China, with cutting quarantine for inbound travelers, scrapping flight ban as well, giving a hope for rebound of the economy by and large. So there is a risk appetite in Chinese assets that right now are surging after Beijing unveiling this biggest pullback in its strict COVID-0 playbook yet. What will happen next? You will be first to know by watching Blockrevision. If you haven't subscribed, do it, and don't hesitate. Okay, market outlook is to be discussed right over, and on market outlook, definitely the world is debating where the dollar index may stop off next. We may have even found that recently, let's have a look at what's going on DXY. Yeah, we have right here a kind of a stoppage yet to been checked out. We are closing, getting more and more closer to that area of a possible sitting demand. So if you're looking for this rebound bet on US dollar, they're supposed to be around this 106.4 levels. There will be a great chance to tip on it. So right now we can find that DXY is being sold off, and that's what our and that's what our chart is showcasing. So let's right now jump to crypto outlook, as it's very hotly debated topic of recently. So we can find right now that some Bankman-Fried phenomenon has spoken the word right now. So the Fed with that event, I will maybe remind about the Fed a bit later. So this event may have spoken to the markets to that extent that the liquidity crunches may roll over the market sphere, and as even if we haven't found that it already has weighed on the DXY position with this VIX, the index of fear, been risen, we can find that this event may have the consequences around that may cast a shadow on many other sectors. So let's make an approach of what's going on right here. So recently we've been experiencing a liquidity crisis. People has hoped that Binance would come in and be able to bail out Mr. Friedman, Mr. Bankman-Fried exchange FTX, but Binance has claimed that the things literally were beyond their control, and they are not taking that approach right now. So the only one case in order to have a this exchange to have a turning up to work will be the bailout prepared by Sam Bankman-Fried alone. Right now, Sam Bankman needs to cover around $8 billion of losses, and he became a victim of its own greed. He's a young man that decided to become that rich that will be literally overtake with its wealth the biggest players in the economy world, but to no avail. So FTX is right now facing a US Justice Department probe for fraud, and that will possibly be a kind of a very, very problematic case for the whole industry. Right now, the CFTC should get into their elements of actions in order to investigate what literally happened with funds. So around 1.5 years ago, we've had this massive fiscal policy boost. If we just to get to the roots of the whole spectrum of the problem, we need to think over about what led to this. So the government decided to not let the good crisis to waste, and they have allowed the entire crypto market to eventually get the very cheap money with funding out of the government. That cheap funds has literally led to market implosion, where the problems started to pile up where the money started to evaporating out of the more and more accounts of different exchanges, those problems literally got into a serious situation. So easy money the government printed in the first place has funded many frauds, many schemes, and those parts of phenomena are always happening during time of abundant and easy credit. So there are two loose conditions where those credits are given away, and right now we are having the consequences of this. We can also find that during recent crisis, during recent bull market, we had this Bernie Madoff Ponzi scheme that led to a serious consequences where original Ponzi happened during times of artificially easy money, where the government fueled that type of behavior. People started to losing a bunch of money from all that frauds that took place, and literally afterwards the government just stepped in and told that they will rescue them in the matter of the proper order, but in order to take the very strict measures of sacrificing kind of a freedom in terms of another regulations that were outstanding, but in their measurements were necessary. So right now the elements of the private markets are literally endangered by this regulators stepping in and trying to rescue everyone over. But we are not taking a right approach to what literally caused this to happen, where the problems literally were the basement of the whole schemes has been supposed to get found. So that are the problems that need to be literally discussed, but I'm afraid that nowhere and no one has a literally business in order to tackle this from that angle that I have just shown. So without any further ado, let's get straight into market mover section, and for this one to happen I need you to jump to another window. So that's out of the charts, and that's economic calendar for this week. We've already had on Thursday, let's get maybe this week, yeah, that will be much easier. For Thursday we had those speeches I've mentioned right after inflation rate been published. Today, however, we had inflation rate from Germany that still are over 10% and are rising still. So German inflation rate is at 10.4% and not giving any sign of taming this in the next months. However, this tendency seems to flatten, at least taking into consideration what happened during this jump from the August and September's gauges. That was really terrible. So today we had GDP growth rate out of the Great Britain, and that was as forecast shown. That's why we have rebound on exchanges, and we are still awaiting for some speeches of ECB speakers, but in terms of consumer sentiment of the US for November, it's unfortunately dropping, but it's the one of the where final results will yet to be published. So that's the preliminary gauge already been noted. So 54, and in terms of the 10-year tendency and 25, it's still on this downward slope side. So it doesn't bode well, but definitely will possibly get better throughout next weeks if this Fed pivot will eventually happen. So that's the consumer sentiment. Let's get to I wanted to mention about this liquidity problems with this with sorry, I haven't shown you the charts right here. Yeah, that was just mentioning once again German inflation rate. If I haven't shown this window, German inflation rate, Michigan consumer sentiment, that at the downward slide, and right now I'm talking over this liquidity problems, with liquidity deteriorating amid this year's historic treasury slump. Investment managers, including PIMCO, argue the world's largest bond market remains just as vulnerable to dislocations as it was during the chaotic days of 2020. So that's the serious problem. Right here, let's get to stock market with trade idea. And right here we have USD WTI. Right now we are in this situation where we are trying to rebound out of this sell-off happened during this 7th to 9th November, right after we had this dragonfly doji to form, and we are rebounding on a high volume. But that's supposed to stop at the very end of the recent one of the recent highs, where both this demand and supply sides about to get meet. So 90.3 is the level where this abnormal resistance, abnormal selling pressure should turn up once again. For this to happen, I would like to have formed kind of a bearish pin bar candle that or other type of reversal pattern in order to confirm this from the higher time horizon. So in terms of the target for USD WTI, I do expect this one to stop over at around 83 bucks. But for this to happen, it would take us maybe even up to 2 weeks to form. So right now USWTI is the one to watch very carefully, and if you wanted to consider a short position, if we manage to get to this barrier, there will be a type of a trade to take with risk reward ratio at around 5 points, so it's quite decent. So remember about risk management, about your alerts being set, all the sell stops being turned on. So that's it in today's episode. Thank you very much for watching. About the live transmission, I invite you on Monday. So have a great weekend and see you very, very soon.